Morning, it's Vijay here. Today is Tuesday, 17 December 2024. Welcome to yet another episode of Pre-Market Commentary, where we discuss what happened yesterday and what is likely to happen today. The pattern which was formed on Friday, the technical pattern, the candlestick pattern, looked very interesting. It was, a bear bullish engulfing pattern, which generally meant that the market should take off yesterday, but we had seen a similar pattern being formed on 5th of December and failing. So yesterday was a day when the pattern actually failed again because it did not go up as most technical analysts who follow candlestick charts would have expected. But there is also another technical pattern which says if the price at the close of the day moves far away from the volume weighted average price by about at least 100 points, then invariably the market will come back and test that VWAP, that is what is called VWAP, volume weighted average price, in the next 2 days. This is my observation for the last many years, unless it is a breakout or breakdown. So probably we are in a indecisive market, and it may be a sideways market, like what happened between 5th and 5th December onwards. So maybe we will have this kind of thing for another couple of days. We don't know that. So everybody is asking what next. So before we really answer that question, let's look at what can move the market either up or down. So yesterday the market closed, Nifty closed below that 100 DMA level, which is what generally a lot of technical analysts look at. That is not a good sign. In fact, if you observe, I'm wearing a jacket which is both having red and black. So I don't know whether the market itself will close in the red or in the black. Opening looks like to be in the red. Today is a very chilly day here, so I'm forced to wear this jacket. Nifty mid cap and Nifty small cap. This is where the bulls come in, and the bullish argument is bhaad mein jaye Nifty, bhaad mein jaye Bank Nifty, but we will take the market up. We are interested in buying the broader market. So Nifty Realty is on a tear. It hit a 2-month high. Again, the bulls are winners here. PSU Bank, which was down for 3 sessions, has now bounced back. Indian Bank and Union Bank led the fight back. Nifty Pharma also was very strong yesterday. Aurobindo was good. Aurobindo had been heavily oversold. We hold Aurobindo, so that is the disclosure. And it had formed a triple divergence on the RSI chart, daily chart. So it looked ripe for a bounce. Yesterday, some good news came and it has bounced back significantly. And I think this could be a beginning of a intermediate uptrend. Ajanta Pharma also did well. Dr. Reddy did well. But Lupin did not do that well. So it was a indecisive market even in pharma. So Nifty Bank actually closed flat. It was in positive for quite some time. Then it got hammered. Then it bounced back. So Nifty Bank, I keep mentioning ad nauseum that it will lead the Nifty up if the market has to go up. Nifty Metals, I think it is overhyped, overbought. So it declined for the second session. Nalco, which everybody is talking of as the next big winner, it is actually, I think, in the ban in the F&O. So that crimped the movement. In fact, it fell down. Nifty IET was weak. That is why the Nifty came down. TCS and Infosys dragged the most. Energy closed in red, Adani green, Adani companies closed in red, BPCL closed in red, IOC closed in red, IOC, BPCL and all are heavily oversold. And Reliance, as usual, followed the trend of downwards. FMCG hit a 1 week high but closed in the red because FMCG, I think, is a downtrend which has started. So I think it will take some time for it to stabilize. So what did the institutions do? Both of them sold. FI sold less than 300 crores. DI sold less than 250 crores. So lackluster, therefore indecisiveness. So who were the positive contributors? Dr. Reddy's Lab, ICICI Bank, IndusInd Bank and Axis Bank contributed positively to the Nifty. Negative was Infosys, TCS, Bharti, HDFC Bank and Reliance. Reliance figures always either in winners or losers, mostly in losers. Now, trade data came yesterday. November exports were so-so, 32 billion versus 33. Imports were extremely high, mainly because of gold imports. So $70 billion vis-a-vis $55 billion year on year. So the trade deficit was a record trade deficit at 37 billion vis-a-vis 21 billion year on year. So this is a goal for the I mean, this is a point in favor of the bears. Now let's look at yeah. So this is the gold imports took it up. So now let's look at the positive part. The flash PMI came, Purchasing Manager Index. It was 60.7 versus 58.6. That means if the economy is growing. Flash Services PMI also grew from 58.4 to 60.8, and then manufacturing PMI also went up from 56.5 to 57.4. So this is in the bullish camp. Now, there is the GST Council meeting, which is happening this weekend, 21st. So lots of things are there. But yesterday, Swiggy and Zomato took off. That is probably because of this news, which said that they lower tax on food delivery by e-commerce operators from 18 to 5%. That's a huge drop in GST if it happens. And that is what took up the Swiggy and the Zomato. Now, Dow Jones created an all-time record, I suspect, because it's down for the 8th consecutive day, down by about 0.25%. Nasdaq hit an all-time high, extraordinarily strong, more than 1%. S&P followed Nasdaq because all these magnificent seven are sitting in the S&P also. FTSE, DAX, and CAC European markets were down. After markets, the German leadership lost their no confidence motion, so elections will be held in February. So there will be some sort of shake in the European markets. I think the markets were expecting this. Commodities, Brent had shot up yesterday morning. It's slightly down. Gold and silver are under pressure. Why? Because Bitcoin is simply taking off. Bitcoin went up to an all-time high at around 1,07,000, I suspect. So that is why the bears are now in control, because there is no good news, or any good news is being discounted with another set of bad news. You take trade data vis-a-vis the PMI data. So trade data is bad, PMI data is good, but everybody focuses on trade data. And generally there is an atmosphere of fear and indecisiveness in the market, but that is, I think, limited only to the large cap stocks. Mid and small and micro are doing reasonably well. Sectors like pharma is doing well. IT has been on a backseat now because it has gone up too much. So therefore, Gift Nifty is saying, I don't trust Gift Nifty, but still, I won't be surprised if it opens lower. So it will open in the red, it is likely. But finally, we have to see what happens at the end of the day. End of the day, yesterday, there was a good fight back from the Bank Nifty. I think we may see a good fight back in Nifty either today or tomorrow, because tomorrow or Wednesday is where the Fed announces a reduction in interest rates. That should do well for liquidity globally. And as we go into the second half of December, generally markets tend to be good. So therefore, I think today may be a difficult day to decide. Today may be a difficult day to trade as an intraday trader. As usual, yesterday we bought the declines. Today also, we will try to buy the declines, but I think I'll keep my ammunition dry, because I don't want to wade into too much of bullishness. I would like to be cautiously bullish, certainly not bearish, but stocks which we need to take are to be selective. Mostly they will be probably from banks and a little bit from IT. Autos are struggling. I don't know why. I think Ashok Leyland may do well. I also think IndusInd may do well. Incidentally, we have positions in both the stocks. We have taken it at the end of the day. So this is where we go. We go brightly. We look at the black part, because red is already clear. But whether we'll get into black, I go with that hope, and more than hope, I go with that confidence. So whatever you do today, I hope it is successful. Thank you for joining.